On today's World Insight, rising U.S. trade barriers with threats of tariffs on North American and other trading partners. So what's the outlook on the world economy? And how can China keep its growth momentum? Answers from Nobel Prize-winning economist Michael Spence.
Hello and welcome to World Insight with me, Tian. Today, let's meet Michael Spence, recipient of the 2001 Nobel Prize in Economics. This is my latest interview with him at the just concluded annual meeting of the World Economic Forum in Davos. Our talk focused on the states of the U.S. and the Chinese economies. Take a look. What do you think about the Trump administration's possibility of exercising heavy tariffs on its trading partners?
So there's two scenarios, and we're uncertain. The one scenario is that it's an opening to a negotiation, and that's the better scenario. And the other one is he's just going to put up tariffs and semi-isolate the American economy. I think the first is more likely. In the China case, President Xi and President Trump, before he was formally sworn into office, had an hour-long conversation.
Yes.
I don't believe you can talk about the weather for an hour. So they must have...
Unless it's an investment environment.
That's right. So I think that, there's a reasonable chance. They're both now experienced. Trump was a new president. China did not expect the previous, tariff assault. And now I think China's richer, more powerful. Both people are experienced. I think they can work something out. So my best guess is it's going to sound a little aggressive and bumpy in the short run, but they'll work out a way to compete and cooperate in some reasonable mix.
Where is the U.S. economy going? If dealing with inflation, what are some of the most important factors the current administration needs to consider?
The financial markets will probably perform pretty well. Silicon Valley's happy because the Trump administration will probably back off from the most aggressive, antitrust sort of competition policy stance of the Biden administration. And so there's a reasonable chance we'll get an uptick in growth. The thing that's harder to process or compute, if you have tax cuts and deregulation and so on, and you deport 11 million people who are in the workforce, although undocumented immigrants, thereby restricting the supply side in important sectors where there's still potential inflation. The question is, can you go do all that and still have prices going down toward the target, or will you get another bout of inflation, higher interest rates, higher mortgage rates, and a problem for many of the people who voted for President Trump? And I think a lot of economists, including me, are trying to figure out which mix of those things will actually work. Mm-hmm. But I think in some sense we're going to have to wait and see. I can't make that whole thing add up to a non-inflationary environment, at least not yet.
What does exerting tariffs on its business partners, both near and far, in the sense, in this neighborhood and also across the Pacific, mean for the U.S. Service sector? I mean, U.S. service sector has been one of the very blossoming area of this economy. So what does that mean?
Well, on the one hand, if you put up tariffs, you probably will have some shift in economic activity. Actually, several. So one shift is, with respect to nearby trading at the margin, you'll get a shift into the United States. But that can only go so far. I mean, Mexico is a very important trading partner. These economies are so different that, shifting what Mexico does and exports to the United States into the United States is a very costly proposition. So there's a limit to that. The other thing that's going on very dramatically in the global economy is that, markets in the private sector are very flexible. So when you put up barriers, they quickly find a way around them. So Chinese manufacturing entrepreneurs are, to use the Chinese phrase, going out, which means their foreign direct investment is going into lots of places.
Indeed.
That where you do at least some of the manufacturing there, you get pass the test of the rules of origin, and then so you're shuffling stuff around.
Right.
But eventually, a lot of that stuff will end up coming into the United States because it's not directly impacted by the tariffs that caused it in the first place.
Yeah.
You see
People
what I
will get the leeway
mean?
anyway.
They'll find pathways through the system.
Yeah. Having said that, though, we see the sincerity of needing foreign investment. But what is likely to be, how would you see his approach in terms of attracting foreign investment? Eventually, will foreign investment be attracted to the United States given the current circumstances? What are some of the best conditions the U.S. still has?
The Biden administration was in the process of establishing significant barriers to the import from China of green technology, electric vehicles, batteries, solar. Now, there's two ways that could go, right? Because that's not a good thing, and it certainly doesn't help the sustainability agenda because Chinese technology is way far, and costs are just way ahead of everybody else.
You don't need to reinvent the wheels.
No, you don't have to. But the way that played out in the 1980s in the automobile industry, when Japan was widely viewed as about to blow our industry out of the water, was President Reagan, then President Reagan, put quotas. The word tariffs, but functional equivalent. And so the Japanese automobile companies started investing in the United States and building cars. And if you look at the global automobile industry now, basically, you have multinational companies building cars in every continent, right? And many countries. I think, that could easily happen in a number of areas, including the green technology area. And it's not a bad solution, actually. You don't have to export it all from China. The companies can come invest. It will generate some employment in the United States. And you can play this all in reverse, right? China can put up barriers if they really want the foreign direct investment instead of the trade flows.
Right.
And so they're not perfect substitutes for each other, but they're partial substitutes for each other.
Did we overblown our talks about China threat? Should we right size, so-called, as they say, right size the China threat or the China challenge? What do you think about these latest discussions? Is it paying a pretext to, attracting foreign investment from China and things like that?
If you have a relatively low level of trust on both sides, and both sides are powerhouses in both the military and in technology, then in some sense, it's not irrational to make sure you're not operating from a weak position on both sides, right? And that's not what would happen necessarily in a world of complete trust and everybody just minding their business and paying attention to the growth of the economy and so on. That's the old world we used to live in, and we're not going back there. We can't, as a practical matter. So, no, I don't think it's overblown. I think on both sides there's a potential loss of negotiating position and so on that you need to deal with by being relatively resilient, relatively strong vis-a-vis, any potential conflict. And if you accomplish that and there's no big asymmetry, that can be a very stable situation. So I think that's the direction we're going.
WTO Director General Oganjo Ibella, she talked about the U.S. has very strong service sector, extremely strong innovative power. Why can't U.S. be happy about that? And that also creates jobs as well.
Yeah, no, if you look in very great detail at the structural trends in the American economy, the long period of decline of employment in manufacturing, say, stopped about 10 years ago. And now it's kind of flat, or a little bit up, right? So that long-term trend that worried many people is eventually over. That doesn't mean manufacturing is a huge, part of employment. So I think, for now, anyway, the United States has reasonably well-diversified growth engines for the economy, and people generally feel pretty good about that. But there is still what's usually called the national defense overlay, and you just can't ignore that. And that's a prominent feature, certainly in the United States, of any policy discussion, including economic policy, right? So I just think, we're going to have a more complicated version of globalization that realistically takes those things into account. I mean, in the old world, would TSMC be building, advanced semiconductor fabrication facilities in Arizona and maybe in Europe? Would China accelerate their, huge investments in, advancing the semiconductor production capability? Probably not, because the incentives wouldn't be as strong. But they are. So that's where we're going to go.
Yeah. Professor Spence, let's move on to the Chinese economy.
Yep.
What is your feeling of the body temperature of Chinese economy?
So on the positive side, China is a powerhouse in science and technology and innovation, right? In pretty much every field you can think of, right? So there's a wildly successful, vibrant biomedical and life sciences startup ecosystem backed by, fundamental science. Ditto with only in the digital area, except for some question marks about the role of the government vis-a-vis the private sector and how regulation's going to work. So these are fundamental strengths. I think they're the drivers of long-run growth.
And green economy?
Yeah, green economy would be an area of clear, exceeding the rest of the world by a significant amount. The problems are more short-run. In real estate, there's, financial burdens associated with that. The government has the resources to deal with this in the sense of stability, but you have a fair amount of, households. The best estimate I've seen is that Chinese households are roughly 65% net worth in real estate. They're not over-leveraged. And the Chinese pattern is lower levels of mortgages. I think it's still around 50%. But still, when you get a big drop in the housing prices,
people are interested.
Yeah, and then people say, "Gee, I'm not as well off as I was." They cut back on their consumption. It's an important growing element of aggregate demand. And then if you have private sector, confidence problems that cause them to hold back on private sector investment, then you have fairly big gaps on the aggregate demand side. And my view of that is that they're not fatal. They're just, especially if the government, stabilizes in the way they have in the past year with policy stimulus from monetary and fiscal. But it takes time, for these things to work themselves through, to household balance sheets to get restored. We have some experience with this in the United States because in the great financial crisis, because of the subprime crisis, we had a lot of household, distress associated with, having their houses taken away, foreclosed on, and so on. And that did dampen the demand side of the economy for a number of years. So my best guess is in 2 to 3 years, these headwinds that China currently faces will be starting to fall away, and you'll see a normal pattern of pretty high growth.
There has been a number of categories, fiscal, monetary, and there will be likely more packages coming out leading up to China's parliamentary season. Yep. Having said that, though, some say it's too little, too gradual. Others say, well, we'll have to see. There's also debates about, you give the money to the developers or to the companies, or you give the money directly to the consumers. So I'm sure you are well aware of these discussions. What is your take on some of these topics?
So I think there's two things you want to avoid, and that by and large, as far as I can tell, is being avoided. One is, in the past, China, when it needed a fiscal stimulus, did it through investment. And that's okay, as long as those investments produce, outcomes in the future, higher growth, whatever, better services delivered to the citizenry, etc. But if you overuse that and just do it to kind of fill a demand gap, then that's a mistake, and that everybody understands that, as far as I can see, and they're not doing it. After the great financial crisis, China, basically embarked on building the high-speed train system. That was quite controversial at the time, but it turns out it was brilliant, right? So now that, the old system handles the freight and the new system handles the passenger traffic, it's brilliant. So they got a very good track record. The other thing that's really important, and I think this is also well understood, is you do not want to keep zombie companies around by propping them up. That just delays the inevitable. That's the sometimes called the Japan problem, but you see it in multiple places, and that has all kinds of negative consequences. And so I think that's understood. And then the balancing act, the hard part, is not doing that, but not having so much failure that you get instability in the financial system. And that's the sort of tightrope that the policymakers, I think, are in part walking.
Just throw in an example for our audience to understand. Some of these developers are private enterprises. So while dealing with the zombie companies, as you mentioned, Professor, there's also a danger that someone took that as a sign that there might be negative effects on the private sector. Correct. So every step of the way, there are a lot of these kinds of double-edged questions that are over there. Did China have experience dealing with these kinds of nature questions earlier?
Yeah, way back, in the period because of the Asian financial crisis, there was a problem, and a lot of assets, declined in value. They moved very aggressively. They recapitalized the banks, and they took the bad assets out and put them in a mutual fund. That was a pretty effective way of stabilizing the system. But they let people whose assets had declined significant in value essentially pay the price.
And lost their jobs.
And lost their jobs as well. Right. Yeah, so yes, and the other thing that happens in China is they study cases outside of China, so they're well informed about this kind of thing. And therefore, it doesn't make it easy to do this balancing between the stability on the one hand and whatnot, but the Chinese, one of the outlying features of the Chinese economic structure is the government owns a lot of assets, way more than most governments. Even though they're publicly traded, the government owns the lion's share of that. So they have a lot of assets to deploy, and then the question for them is how to use them effectively.
So what is your suggestion then?
On the confidence side, I think just clarity is the important thing.
Clarity about what?
About what the role of the private sector is, right? And then once it's clear, stick to it. But you get loss of confidence in part when you change your mind.
On the other hand, you also see quite a number of policies coming out, Professor, regarding how to make sure more confidence can be built for the common folks.
Yes.
For example, deal with their problems when they are aging, deal with the education system, deal with the real estate so that people have access to ordinary housing and the list, and healthcare as well, and the list goes on. What do you think about the effectiveness and the degrees of determination that you see in some of these policies coming out?
I don't have enough information to know how far along they've gone. I do believe that when the economy was still relatively young, was a better time to get ready for an aging economy with a declining workforce and well-built social security systems. I think they were slow to get those in place, and so they're scrambling a little bit now.
On the other hand, how to stimulate the domestic demand? There are sectors that people can work on, silver economy, entertainment, arts, and culture, and tourism, and the list goes on. And some of these buttons are being pushed.
Yes.
And yet, as you said, Professor, short term, it seems not yet to bring back all of these, confidence and make people bring money out of their pocket.
Yeah, I agree. I think realistically, when you have a loss of confidence, you can't restore it overnight, regardless of where it is. And you can't restore demand overnight in a kind of sustainable, pattern. You can push it, with some stimulus measures as a kind of bridging mechanism and so on. And I think that's what they're trying to do.
Professor, you have been hearing analogies such as China is a big boat. Mm-hmm. It really takes time to steer the directions. Once there's policies and the effects can be studied, in fact, sometimes later. Yeah. So what do you make of those analogies? Are they relevant?
Yeah, I think it's a fair observation that you can't turn a super tanker, around in, 2 minutes, and because of inertia. And the same thing applies.
And it's dangerous, by the way.
No, I think that's absolutely right. On the other hand, what happens in an economy depends very heavily on a set of things that people tend not to pay attention to, which is these investments in things that drive long-term growth. Mm-hmm. And so, but I do pay attention to them. So, for example, in the United States, the Biden administration, even though they don't get much credit for it, made some pretty important investments in, infrastructure deficiencies and chips and science and even some green technology. They don't pay off, tomorrow. I mean, yes, some people get some subsidies to do things, but the real benefits are down there. The other economy that has very long time horizons and does not make mistakes with respect to the long-term investments is China. And I contrast it with Europe. In Europe, we're not making I live here, these investments at the level we need to drive this long-term structural transformation and growth. So to me, the United States and China are the big economies, benefit from that size because the cost structures of new technologies are high fixed development costs. The return on that investment is directly, proportionally related to the size of the accessible economy. Europe has a big economy, but it's underinvesting and it's fragmented and sort of therefore less effective in supporting that kind of investment. So the reason for my confidence on the Chinese side, I mean, assuming we don't, get into conflict and everybody suffers.
That's a whole different story.
That's a complete different story. Then I think my confidence in the Chinese economy is sort of long-term. By long-term, I mean decade and a half, final step to advanced countries. I mean, many parts of the country are also already high-income places, right? Yeah. It's just a matter of bringing everybody up to that level.
You see the Biden administration earlier put into the CHIP Act, and right before they left, they also put forward something about the GPU. Yep. And of course, the Trump administration likely to have executive orders revert all of them, or at least some of them. But at the same time, you see Trump early in his days in the office already talking about 500 billion investment in AI infrastructure. Right. Many say, we'll see. Many say it would have a lot to do with energy and etc. But anyway, how do you see these kinds of policies working for both the U.S. tech development and the tech development's impact on the economy, the real economy? And having said that, though, there's a Chinese version of that, also building up high tech, encouraging a lot of state investment, but also private sector play a huge role in green, for example, some of the AI applications as well. So how do you see these two economies are dealing with that and their ways of doing it?
I think they're both dynamic. They have somewhat different economic models, assessed by essentially how the state and the private sector interact. Yes. But the way I think about it is there's a spectrum, right? Yeah. At one end, the state does everything. And at the other end, the markets are supposed to do everything, and neither one of them works very well, right? in the middle, there's a bunch of workable models, right? And sort of China's here, and the United States is here, but they're well within range. And I don't think the right kind of competition does any damage, actually. So what's the right kind of competition? You know, don't fall behind, you know, invest heavily, make sure it, you know, it impacts the whole economy in a kind of inclusive way. What's the wrong kind of competition? I mean, the kind that's destructive, we have some of, which is see if you can make the other person slow down, right? By taking away something they need, right? If you think about athletic competitions, you know, you're supposed to sort of train, you know,
better.
better, and then run faster than the other person. But you're not supposed to stamp on their foot so that they can't run. So the trick here is, because of this national security issue, is to find a good balance in that area. And so the Chips and Science Act is a classic, right? It's basic advancement of the investing in this is on the American side, advancing the technology. The second part, and that's just good, right? China will do the same thing. Second part is resilience, that both China and the United States will take steps to make sure they know how to do crucial things, like make the most advanced semiconductors. I'm sure we'll do that. And we're not going to try to make them all. We're not trying to put TSMC out of business. What we're trying to do, and I think China will do the same thing, is make sure if the world goes badly, we know how to do it. And making semiconductors is really hard. So that's step two, resilience, meaning, you know, ability to withstand shocks.
Deal with crisis, right?
And the third part of the Chips and Science Act is see if we can hold China back. And they're all in there in the same package, right? So the first one is hard to argue with. Second one, reasonable, practical solution to the current situation. Second one would be nice if we had less of that.
Professor, it has always been enticing to ask for your views and insights. I'm sure we are going to continue our conversation, hopefully, not 2 years or 3 years from now, right before that, okay?
For sure. Thank you so much.
Professor, thank you so much. That's Michael Spence, winner of the Nobel Prize in Economics, talking about China and U.S. economies. And that's all the time we have for today. If you'd like to know more, search World Insight. Check out our YouTube channel. Follow us on X and Facebook. I'm Tian Wei. On behalf of the team, thanks for being with us. Bye for now.